The pair has broken below the key support level of 1.3650. Okay, it's somewhere over here. Okay, at this place. And then now is below the all major moving averages, that is the 20, 50, and 200. Okay, the momentum is exhausting as it's below the RSI 30. Okay, a bullish momentum can be seen. Now let's look at the fundamental picture. The recent inflation data was mixed from the Canadian dollar, and then we had the US dollar that was softening. This created a fundamental headwind for the pair, and the oil prices remained the main factor, while the general trend of the Canadian dollar, which is also a commodity currency, is strengthening against the softening greenback. So, the market is pricing potential Fed cuts, which is weighing on the dollar. The recent Canadian inflation data was mixed and has not been enough to derail the looney's strength. Oil prices were the key driver for the Canadian dollar. As long as the oil prices remain elevated or at least stable, the Canadian dollar has a natural floor of a support. The fundamental backdrop of USD CAD is the combination of a softening US dollar and a potential Bank of Canada that maintains a hawkish stance. Relatively or comparatively to that of Fed, which is a little bit tilted towards the dovish side. Now let's talk about the risk factors. The risk factor in this bearish momentum may include any sudden escalation in the Middle East, which could cause a flight to safety. Historically, the US dollar is the main beneficiary, which can bring a temporary spike in the USD CAD. If there is any hawkish surprise from the Federal Reserve or any dovish pivot from the Bank of Canada, this would also invalidate the bearish trend. So now this was the fundamental picture. Now let's have a look at the technical side. On the technical side, a clear bearish movement can be seen across the H1, H2, H3, H4, 6, 8. Okay. And these all are bearish candles. That means the smaller time frames are moving towards a bearish trend, but the trend is not too big. I mean, these candles were just like 3.4 pips, not a big move. Now, where is the support? The support lies at this H12 open price over here. Okay, this place. Now, if I can just take my Fibonacci and draw from the lows to the high, so you need to look at this place. It's almost exactly in confluence with the 76% level. Okay, this is something what the major banks would love to watch. Okay, same goes for this daily candle. It's the same level. Okay, so this is the main key level. There can be a bullish momentum even if we have this RSI oversold type of stuff on this M15. So there can be a bullish momentum towards the upside. And if there is a breakout of below this VIX, then all of this place from this low to this high over here would be considered as a liquidity. And this can happen in the New York session. Okay, so be careful, mark your levels. So if you need to go bearish in alignment with the fundamentals, then this is the place you can go bearish. And if you need to go bullish, then this area is something you need to see a breakout of. Okay, and this is not a trading signal. This is just for educational purpose. Thank you.